We're back talking finance again today as the end of financial year looms a little closer. It's good to get some insight into what those last-minute decisions need to be about the things we need to be attentive to before June 30 rolls around. Gavin Martin from Cornerstone Wealth is back with us today. Hello, Gavin. Welcome back to 2020.
G'day, Neil. Great to be with you.
Gavin, here we are, looming again, the end of financial year. There are some things we need to be attentive to before June 30 hits. You've got a few priorities in mind. What's the top priority for getting things in place before June 30?
Yeah, big picture-wise, whether you run a business or you're earning income, if you have business-related expenses that you're about to pay, or they're about to come due, then do them before the 30th of June and you can get a deduction for those rather than having to wait another 15 months for them to come through on your tax return. So bringing forward any expenses that relate to work or self-education expenses. Actually, with self-education expenses, they're going to be reduced from 1st of July 2014, so not next financial year, the following financial year. So they're going to be capped at $2,000. So if you've got some studies or education that you want to do, you could claim as a deduction against your income, then potentially it's a good idea to do that in the 2013-14 financial year, rather than waiting till the year after that, so that you can claim the full amount as a deduction.
So a little bit of forethought doesn't actually save you a lot of money, but overall it makes things a whole lot cleaner and brings that saving forward. Is that the way?
Exactly. If you waited, say for example you had $10,000 worth of self-education expenses and you put $5,000 over the next 2 financial years, then you would only be able to claim $7,000 of it. But if you were able to somehow pay for them in next financial year, you'd be able to claim the full $10,000, which might, depending on your tax rate, might save you $1,000 or it might save you about $2,000. So,
any advantage at all for people who are accumulating a HECS debt rather than paying their financial education expenses in advance?
Yes, they're going to stop the lump sum payment on HECS debts. I can't recall when the actual date of that was, but if you're in that case where you're thinking that, I might pay down a lump sum on my HECS debt and get a discount on it, then just check the date at which that stops, because that's going to cease. I can't remember whether it was a budget night or at a latter point in time, but they're going to stop being able to get a discount on lump sums off your HECS debt.
Okay, June 30, it's getting closer and closer. What else is on your priority list, Gavin, to attend to before the end of financial year rolls around at the end of the month?
Ones where low-income earners can take advantage of the government co-contribution. So if you earn less than $47,000 or less than $32,000, you can put $1,000 into your super fund and the government will match it with $500 co-contribution. So a 50% return and no risk on the money. So that's a good one for those lower income earners. There's also the eligible spouse contribution, which is really for those that have a spouse, a low income earning spouse or no income earning spouse. If that spouse earns less than $3,800, then you could put $3,000 into that spouse's superannuation account and get a $540 tax rebate back. So you're effectively getting $3,000 into the super fund, but it's only costing you $2,500.
So it's really important to pay attention to these issues before June 30 because sometimes there'd be those who would think, I worry about my tax when the new financial year starts. But really, attention to these will be a big saving to the typical budget.
Yeah, with a lot of the tax deductions or tax strategies, they do have to do with super. And with super, you actually have to have the contributions in the account. It's not just an accounting system where you can account after the fact and say that this money actually went in. The money actually has to be in the account. And so when you're dealing with super, that's how it needs to be. And then similarly, if you're wanting to save some tax by salary sacrificing to super, and you've got the opportunity to make one more salary payment, but rather than take that as your income in your bank account, direct that to your super, you could save a significant amount of tax. So say, for example, if you're on $60,000 a year, your last salary payment just before the end of June is $5,000. You've not done salary sacrifice before, but you're going to salary sacrifice 100% of that last monthly payment, and then you'd be saving nearly $1,000 in that scenario in tax. So, well worth considering if you're in that position that you can do that.
And what else is on the priority list, Gavin? Have we exhausted the possibilities?
There's a couple more. One more is if you've got investment loans, whether that be to borrow toward buying investment property or borrow to invest in shares. They're riskier type strategies, but if you're comfortable that you're going to maintain that strategy for the next 12 months, you could prepay some interest on those loans and bring forward the deduction that 12 or 15 months earlier. And the other one is if you've got some capital gains, you've sold an asset at a profit. We talked during another segment about making a donation to offset that gain. But another way to reduce the tax on any gain is to sell some other assets at a loss, and then you can offset that and therefore not pay any tax on it.
Financial advisors, tax accountants get busy this time of year. Is it an advisable thing for people who have some of these sorts of issues to deal with to actually make an appointment to see their personal financial advisor?
Yeah, either make an appointment to see their advisor or their tax accountant, particularly if you have got some issues that relate to potentially business or asset sales. Well worthwhile considering those or speaking to somebody about those, and into the new financial year as well. Think about pre-planning those events if you're planning to do something like that.
Well, Gavin Martin, always good getting your insights into the things that are necessary in the lead up to the end of a financial year and for the start of a new one. I'll point people to your website, Gavin, at www.cornerstonewealth.com.au. And there may be listeners who don't have a financial advisor who might like to access your services, but just to say that your advice is general in nature here on 2020, and those listeners should see their own personal financial advisor to take circumstances that might be personal to them into account. Gavin Martin, it's a pleasure. Thanks for being with us today on 2020.
Lovely to be with you, Neil.